Hello, everybody. I'm Toby Gennaro. Looks like we've got a good crowd set up this morning. So, let's do the sound check as we normally do and make sure that the technology is working all right. If you guys can hear me loud and clear, and you can see the current splash screen. It says live technical analysis market movers for November 20th. Some of you guys that are logged in, just give me an electronic high five on the question box on your screen, and just let me know that everything's coming across loud and clear. And we'll get the recording started and do a little live introduction then. Great. Looks like we're all good to go with the technology. So let me just do a little intro, and then we'll get straight to the content for you guys. Hello, everybody, and welcome. I'm Toby Gennaro, and I'll be your presenter for this morning. The topic for today is going to be, as usual, live technical analysis. So I'm just going to be talking through a series of specific trade setups in real time that I'm seeing in the markets on the charts. So for those of you that are on the live webinar today, if you have questions during the session, you can just type those into the question box on your screen. I may be asking you some questions as well. We'll try to keep this interactive. Always tends to make it a little bit more interesting that way. Got to put up the risk warning and disclaimer as we normally do, so we'll get that up. If you guys can just have a quick read through this, that would be good. What this is saying in brief is that we provide education only, which means we do not give any financial advice. And as most of you know, trading the markets can be risky. It's not suitable for everyone, and you should seek independent professional advice. All right, everybody good with that? And just need to put up one more disclaimer here from Nadex. If you guys can have a quick read through this one, the short one, this will be the last one, and then we'll jump right to the content. Okay, everybody good with that? Now, to kickstart your trading each and every Tuesday morning, you can utilize this regular feature from the trading team here at Trade with Precision. And as usual, with so much going on in the markets each and every week, the big question is, how can we spot opportunities across multiple markets, multiple time frames? So you can join us weekly for this insightful live webinar where we'll be focused on technical and trend analysis across some of the major markets, just to help try to find an answer to this question. So let's go ahead and jump into some of the live charts, see what kind of trading opportunities we can find for today, and show you guys how I'm navigating the price action. So before we do that, I took a look at a couple of charts before we got on and started up the webinar this morning that I thought would be good to consider for some potential trading opportunities. So we'll go ahead and take a look at those two markets. So the first one's going to be the pound dollar, and then we'll take a look at the dollar CAD and see what that's all about. So give me a moment here just to get my screen set up so you guys can see everything. We've got charts, and we've got Nadex contracts, and those will be the two that we're looking at. Okay, so we've got the pound dollar, and I'm starting off at the higher time frames here, the monthly and the weekly, as we normally do, and that's called that the top-down analysis, where you just start with some of the higher time frames, understand the overall trends, because those are usually going to predominate. And we'll get that from basically three higher time frames, the monthly, the weekly, and the daily charts. And then after that, you can go down to the 8-hour, the 4-hour, the 2-hour, the 1-hour, and then get more granular with some of the minute charts if you desire to do that. So for right now, I've got a couple of Fibonacci's that have been drawn here for quite some time because we're on the monthly chart here. And the main thing is putting a Fibonacci between one swing high that goes back quite a ways to the most recent swing low, and then I'll draw another one of those from the same swing low to the most recent swing high. And what that does is it gives me basically a bounce off of this low right here up to this level, which you can see is very precise at that 61.8% level. It rejects that level, although it takes 4 months to do that since each candle here is a month. Rejects that 61% level, and then it comes all the way down, and you can see how it's rejected the 61.8% level for basically the same amount of time. We're almost on basically month 4 here, and we're almost ready to wrap up this candle here in another 10 days or so. But as you can see, we got a bounce off of this level, and sometimes depending on what the overall, if the overall trend was up, then we'd probably see a bounce here and we'd go back up and break the high and go back up to the top. But since we have, lower highs and lower lows, this could just be another lower high that's set up right here, and it looks like we're going to be breaking down below this level. So we just kind of did a stutter step here on the 61.8 fib retracement, and from what I'm seeing, it looks like we're going to probably break down and maybe do another retest of of this level down here at around 117. So we got a nice rejection candle set up there. If that closes out in that same fashion over the next 10 days, then more than likely we'll probably see a decline on the price here on the pound dollar. So looking at the weekly chart, again, we can see we put in a lower high. If we can break through this level right here, we're pretty close there, right around 112, 112.5. If we can get a break through that level, I'm thinking we might even get a flat level setting up here. We'll start to get some small candles consolidating right at that level. And let me just put for you guys a quick, let's see. Let me do a quick support line. We'll do a horizontal line right there, and it'll kind of give us. So we've got, touches there are fairly precise at that level. We can go back. We can see some other touches right along that level. So this has been a level that's been around for quite some time. So that's why we're getting hung up right there. But more than likely, we've got 2 touches, which defines our flat level. If we'll get a 3rd touch and then a consolidation of some small candles, that would be a pretty good flat level that would be looking to break lower. And then a way for me to gauge the distance that might travel if we do get a breakout would be looking at the swing high of the consolidation zone, which is right around 133. So 133, say to about 113, roughly right about 20 points almost. And so that could take us, that could take us probably somewhere down around here, maybe a little bit lower in between the 120 and the 122 level. So that's looking pretty good for a continued breakdown. And then obviously, if that gets down to that 120 level, 122, then obviously 117 is pretty close right around there. We'll take a look at a couple of more charts, a little more granularity here. Here's the daily chart. You can see we've got all the moving averages, the 200, the 50, the 20, and the 10 all rolled over very nicely. Lower highs, we've got lower lows, and potentially looking to break through this 27 level and get another lower low. But for right now, we've got a short rally right back into that sell zone between the 20 and the 10 period moving average zone. Thereabouts, it could be right in the center of that. Sometimes it's a little bit above it. Sometimes it might be just slightly below it. Today, it's just slightly below that, and we're getting a bearish candle set up. So the trend flow strategy has got to wait for that candle to close out by the end of today. If it closes out bearish like it is, then we'll get a trade set up to go short at the break of this level. And the break of that level, as it looks right now, could change by the close of today, but the low would be right around 128. So once you get a break of the low at 128, then we should get some continued selling, at least down into this 127 level and potentially, a little bit below. You can see it a little bit better here with a couple of setup candles, all the moving averages fanning out to the downside, lower highs, lower lows, another lower high put in here, nice rejection candle there, another nice bearish candle there. We've already got a break of the low of those candles, and it looks like we're, pretty handily moving down to that 127 level. And for those of you guys that want to get a little bit more granular, again, we've got another same setup right here. All the moving averages fanning out, lower highs, lower lows, trending downward. Nice rejection candle right there. Pretty long consolidation in that zone. But you can see when you start getting these small candles and those nice rejection candles like that, puts in just a higher high. And then we've got some other candles here. But once we break through that, it never breaks through that high. So once the next candle breaks through the low of the setup candle, then normally that high is going to be the one that remains. So we have a couple of them that are pretty close up there, but for the most part, got a couple of more rejection candles here in a breakdown, and it looks like we're moving lower. Same thing right here, except the 10 and the 20 period are crossed over in the wrong direction. So we can't use that one, but we have plenty of other charts here on the 240, on the 480. Based on the daily chart, we can see what that setup is going to be at the end and the close of the session today. That'll give us potentially a longer trade. But here we already have some setups on the 480 and the 240. They've already broken, but it looks like there could be a little bit more downside to go based on how this candle closes out for today. So that's just some of the of the price action that we're looking at right now. We're sitting around this 128 level, looking to go lower. Let's take a look at some of the charts on the pound dollar. Since we're looking at the 8-hour and the 4-hour, we probably want at least a 24-hour, which would give us 3 candles on the 8-hour. It would give us 6 candles on the 4-hour chart. And so that's probably something that we want to be looking at, make sure we give ourselves enough time. So some of these around here, 14 hours, really not enough time. 18 hours, getting a little bit closer. And then we're going to start to go down from there. So more than likely we'd be looking at today's Tuesday. I think be looking maybe at a weekly, or we could probably look at, I think, that 18-hour one, see what that one looks like. So on the weekly, right around that 128 even level, this one right here would be just slightly out of the money. That's pretty good. So it's almost right at the money, which means it's going to be selling for right around 50. And so the short on that would be, right at, right around that 44 level. There really isn't any. You could go, let's see. Could go something a little higher, like the 128. I wouldn't want to do that because you're only getting one. I want to have at least a 1-to-1 reward to risk. So looking here at like the 127.75, that one's a little further out of the money. So you could sell that one for 60 and look for it to go to 0. This one right here is pretty close. You're giving up a little bit less than a 1-to-1, but that's reasonable. Price could just stay currently where it's at, and this would gradually decline to 0. Then you have 127.25, which is still above that 127 level. So you have a couple options here of shorting, in and around that 50 level and above, going into some of that downward motion. Now, if we go back and take a look at some of these, I think there was one other one, here at 18 hours, almost about 19 hours. This one would only give you about 2 candles on the 8-hour chart, but it would give you about 4.5 candles on the 4-hour chart. And then looking right around, a little more granular here, so we've actually got one dead at 128. That one's sitting right around that 50 level. We've got one already in the money that's sitting right around just below that 50 level. Usually I like to stay, above 50 when I'm shorting because it gives me that 1-to-1 reward to risk, simply meaning that I'm risking $1 to make at least $1, if not $2 or $3 on the trade. So as you go down, you start to get into that, 2-to-1, 3-to-1 reward to risk. As you look at some of these, you can go all the way down to that 127 level. We could be selling those for 90 and potentially looking for those to go down to, maybe not 0, but if it touches at 127, perhaps it might be somewhere around 20 or 30, depending on how quickly, the price action moves there. But you have a whole slew of opportunities here. And normally I like to keep them close. The longer you're looking for the price action to move, the less likely it is to happen within the time frame that you're expecting. So with a lot of these, I like to stick up around here and keep them close, but still get a pretty good reward to risk on something like a 77. Pretty good 2-for-1, even 3-to-1 reward to risk on something like that. And you've got a decent amount of time for that to happen. So that's what that looks like. Let's take a look at the dollar CAD. We've still got about 15 minutes here. and see what that one looks like. Dollar CAD. So we had folks on the pound dollar where they were selling the pound and buying US dollars. Here we've got this basically the same thing where people are buying US dollars, but they're selling the CAD. So right here we're we've got some higher highs and higher lows. We've got a little bit, I wouldn't really call it a flat level, but we do have a level of resistance right around here. We have had some pretty precise touches right around there and a little consolidation right around there. We're getting a nice bullish candle up there, but we have all of these higher lows, 4 of them trending up. We have 3 higher highs, and more than likely when this breaks, we'll be putting in another higher high, and that trend line would put us probably right up around that trajectory going right up into that 138 level. So, and obviously this is a weekly chart, so that could take some time. That's not going to happen, this week. But here on the monthly chart, we've got, some higher lows as well. We've got 3 of them. We've got a couple of higher highs. We've got a very nice bullish candle that set up last month. And we've got all the moving averages, the 200, the 50, the 20, the 10, all starting to fan out again. And we have a long history of a nice uptrend here. This was just a pretty long, protracted pullback on a monthly time frame. And we've kind of bottomed out here, and we've made the turn here over the last 12 candles, which is roughly about a year on a monthly chart. So we've broken the high of that candle. That's our signal to look for potential longs moving higher. We've got a confirmation of that on the weekly chart, so that looks good. And then looking at some of the lower time frames, we've got a series of higher highs and higher lows. Beautiful trend right there. All the moving averages fanning out really nicely. Candle has already broken to through the most recent high right around 132. We've got a little bit of slight bearish divergence right there, but I'm not going to worry about that too much. Right here we have a lot of bearish divergence, so we could get potentially maybe a flat level setup right here, and I'll just put a line right there. I always want to be looking for possibilities of things that could happen. So whenever you get some of this bearish divergence, it doesn't mean that we're going to completely roll over on this, but we might do another pullback off of this level, and price action might pull right back into this trend line, say right about here, and then all of a sudden it'll make a move back up to that level, reject that level again, maybe come down again, and put in another higher low, and then move back up and start to consolidate and then break out. So those are some of the potential things that I'm looking for when I see some bearish price action right here. I don't necessarily want to be going gung-ho, getting long right here. The market may break through it, it might shoot up, but the probabilities are not with me at this point. I want to probably wait for a pullback and see if that happens, and then look for some signals here where I've got another bullish candle in the buy zone between that 10-20 period moving average, and then I can get set up for another move back up to that 132.6 level, and that would be a safer place to enter. Here we've got a lot of overextension from the moving averages. Once again, all that tells us is that we have a lot of bearish divergence here, which means we have a higher high, but we do not have a higher high on the indicators. We actually have a lower high. And so here we have probably an equal high. So those kind of cancel each other out. But more than likely with that overextension, we'll get a snapback to the moving averages, put in another higher low, and then another move back up to the top based on what some of those higher time frame charts are telling us, like the monthly and the weekly, that the upward trend has a much longer time frame to run. But since we're trading on a shorter time frame, want to be pretty careful about when we enter. Don't want to be chasing the green candles way up here because it's got a lot of overextension from the moving averages. So I want to wait for that pullback, potentially off of this level right here that we can see pretty nicely right around here. And you can see how we're rejecting that level. And so I'd be interested just in seeing if we can get another pullback. And a lot of times, something else that you can do is we can look at a Fibonacci retracement between the most recent swing high and the swing low. And then if we are going to get a pullback and a rejection off of that key level, this is the third touch right here, we might get a pullback to still put in another higher low, and that higher low would probably come in right around this zone between that 50 and the 62% level. So we've got a little bit of resistance and potential support here at the 50% level. We have a lot more support that's coming in right around that 131.7 level, which is hanging right around that 61.8% level. So that's a possibility too. And so when you're looking at your charts, you always want to have a number of possibilities of things that might happen. If we get candles closing out pretty high up around this this flat level, and you start to see some small candles pressing up on that level, then more than likely that's indicative of an imminent breakout. And for that to happen, you would have a series of small candles consolidating here, and the moving averages would then be catching up to the price, and then you'd find those small candles consolidating. They would be right in that buy zone between the 10 and the 20 period, and those moving averages would catch up all the way up here while that price consolidates, and that'd be another signal that this would be a flat level breakout, and the breakout would be imminent at that point. So just a couple things there that that you guys can keep in mind to take a look at as we move down through the charts. You can see there's just a lot of overextension here. We might have price in the buy zone on some of these, like here on the 5-minute chart. You got a little bit of a pullback into the moving average zone. You might need to pair this up with the 5 and the 2-minute chart. That would be a very brief trade. As you can count the candles here, it might run for 3 or 4 candles, which is 15 to 20 minutes. The pullback takes about 3, 4, or 5 candles, so anywhere from 20 to 30 minutes on the pullback. But just be looking for a nice green bullish candle, and then a break of the high, and then potentially we'd be looking to trend back up into that 132.7 level within probably by the end of today, it would look like. Here, you'd want to be careful when you do hit that 132 level. You might have quite a bit of bearish divergence at that level. So I wouldn't be looking at any contracts that are above 132.7. I'd be looking for something nice and tight right around here, because you're more than likely only going to have an hour or two on the on that contract. But first of all, you need a nice bullish candle in the buy zone. We're not getting that just yet. We're actually getting a bearish candle, and so there might be more downside here. This candle might actually break down through this level, which then invalidates the trade. So we always have to wait for the candles to close out and make sure that we understand that that we have a solid candle that has formed, and the candle is bullish, and it is in and around that buy zone between the 10-20 period moving average zone. So let's go ahead and take a look at, let's use this one for example, the 5-minute chart, and take a look at some of the shorter time frames. Looks like that one might be closing out here in 2 minutes. Actually, we'll see if it actually closes out bullish. But let's go to the charts. 130. I'd probably want to look at something around 132.6. 132.6, and we've got 35 minutes. I've given it almost about 6 or 7 candles on this one, so you could go as short as 35 minutes, and then that would be 132.6. Let's see. 132. So that one's slightly. Let me go back to the time. Let me go back to the chart here. 132. Okay, so now we're on 132.4. Looks like that candle might close out in the next minute. It might close out bearish. So that's going to invalidate any trade setup. But let's just take a look here. 132.5 and 4. You'll see these are trading, on both sides of that 50 marker, because there isn't anything right at 132.4. But 132.44 is going to be just slightly in the money. So it's trading at much higher than 50. If I'm going long, I want to be looking at something at 50 or below that, like 40, or this one here at 35, right around there. And price would just have to move to 132.54 to accomplish what we need. But that candle would have to close out, in a very bullish, and it didn't. So it closed out bearish. So we have to wait for another candle, and then just do the same thing. Look for a bullish candle. We might get a nice small indecisive candle, something that looks, maybe something like that, and then wait for that candle to close, and then look for the next candle to form, and then start looking for, those contracts somewhere around that 132.6 level. I think would be the safer bet. If it starts to break down further, then more than likely that's going to invalidate the trade setup, especially if it breaks through this level at 132.4, that swing low. Then that means we no longer have higher highs and higher lows. So what I'm expecting right here is just another higher low to set up. So we would have then higher low, higher low, higher low, and then that would signal the next move higher. So we don't know. We've got another couple of minutes to wait on that. We'll have to see how that candle closes out. Also, you can look at this one from the higher time frame perspective. There's nothing, no contracts to look at right now because we're so far overextended away from the moving average zone. That's not where we want to be buying. We want to be waiting for a pullback into the buy zone on, the 4-hour, the 8-hour, something like that. Now on the daily chart, we could get, a runner because we just had a setup, and usually this will run for several candles. So, there certainly is a possibility that we can break through this level, close above that level, and continue moving. If we do close above this level and get a solid close on the daily chart, then more than likely there will be several more candles to run beyond that 132.6 level. So those are just some of the concepts of how we look at the charts, how we identify this stuff technically. And you guys can learn some of this stuff by checking into the advanced course, where we'll show you how all this stuff works, and we'll show you the ins and outs of a couple of trade strategies and how you can use those in your own trading. Let me just wrap up here real quick as we're coming short on time, and let me get my my screen set up here. And so just in conclusion, the reason we're doing these for you on Tuesdays is Nadex is just making an investment in your success as an investor, and that's why they sponsor events like this today. A couple different ways for you guys to get in touch with us: phone and email listed here for any questions that you might have, or you can ask me your questions right now. Just use the question box on your screen as you've been doing. Demo accounts are also available to provide you some familiarity with the contracts and what we've been talking about today. For those of you that are current members of Nadex, if you'd like to begin trading again, go ahead and log in to nadex.com, take advantage of that advanced education webinar, learn a couple of trading strategies, learn how to read the charts technically like we've been doing today. That'll help you out a lot and help take your trading to the next level. If you're new to Nadex and you don't have an account but would like to set one up, again, just go to nadex.com, click on that orange box in the top right. It says sign up. Just fill in your details there. Someone from Nadex will respond via email to get you set up and get you started. Before you sign off, there is a short survey upon your exit. Please let us know your thoughts there. Fill that out if you would. And again, I'd like to thank you all for joining us. And this will conclude the webinar for today. So have a great Thanksgiving holiday and have a great rest of the week trading. And we'll look forward to talking to you next time. Take care.